Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Hey Hugh. So
We're up 4%, baby. No way. 4 fucking percent.
Making money right now off of penny stocks, you know what I'm saying?
Dan and Hugh are so thankful.
Maybe not you, because you're not rich enough, but...
Hey, Redman is in the building. Atlas Trading, what the fuck is up? Dan?
Don't suck a stock's dick all day on Twitter.
Hey Zach, it sounds like you have raised two very fine young lads.
And buy the fucking dip.
Word to Timmy Sykes.
Welcome to the Penny Stock Podcast, Going in Raw, featuring Dan, Deity of Dips, and Hugh Henne.
Oh, and it's produced by Vinny Strokes.
Also featuring
Incredible Bob. Let's roll. Welcome to Pennies. Oh, shut the fuck up. On this episode of Pennies Going in Raw, me and Hugh take a second to introduce ourselves, talk about the market's absurd action and how we fared. Hugh tries to explain consolidation, and we also take a little Q&A. Okay, welcome to Pennies Going in Raw with Dan and Hugh, presented by no one. If you want to sponsor us, hit us up. Today is Monday, July 13th, and the market looks like it will continue going up forever, man. Yeah. I don't think the market will ever stop at this point.
Yeah, dude, it's just on a constant uptrend up. I thought the thing on Tuesday, the little dip on Tuesday would matter, but it just, it was just a fork in the road for it. And it just said, fuck it, and just kept rolling.
Yeah. I mean, Amazon and Tesla are like just perfect examples of that. They're just juggernauts right now.
Yeah, I looked at Tesla's price. Every time I look at Tesla's price, I'm just like baffled. It makes no sense just with like coronavirus coming back. And it feels so different this time just because back in February leading up to it, it felt like such a big inevitable thing. And then everything stopped immediately. But this time it's like nothing's really opened back up all the way. We still have no sports. It's like, it doesn't seem like too much is going to change, even though I feel like, this lockdown is going to shock a lot of people.
Yeah. It's funny. William Hunting on Twitter, him and I talk every day. And you know what he said? And this was like my aha moment. He told me the thing that made the market tank to begin with, or, not tank, but pull back, has not changed. In fact, it's gotten worse. And the market has completely rebounded and gone to new highs.
It is absurd. Like Americans aren't even allowed in some countries now because of coronavirus, and our market is thriving. Everything's okay here. So I think we do need to take a second to introduce ourselves, seeing as this is the first episode. I guess I'll go first. I'm Dan. A lot of you may know me as the Deity of Dips. I'm probably most known for wearing a blazer and making videos on Twitter. And I'm a pretty new trader, about 8-9 months now. I started with about 4K. It dropped to 2K in February, and it's just been on an uptrend from there. Big in Atlas, that's where you can find me. But yeah, man, 25 from Alabama, and that's about all I got. Big sports fan, but other than that, what about you, Hugh? Tell me who you are.
Yeah, so I'm Hugh. I'm 21. Probably most known for UAVS. I feel like that day alone, I gained 9,000 Twitter followers. I started trading about 5 years ago. I lost my entire net worth and basically worked my way back up. And this year alone, I'm up about 3,000%. 21, and I'm a senior at the College of New Jersey. Great place.
Go whatever the hell that mascot is. Yeah, I think what he's actually known for is going from 50,000 in February to $1 million last month. Let's not be humble about it. That was something that's kind of impressive. But I think there's something else you need to get into is you said you started trading 5 years ago. You're 21. Let me do the math. That means you started at 16. So you said you lost all your network. I mean, how much could that have entailed? I mean, you were 16. Your money from working at the local shoe for less.
It was the summer camp, and it was $7,000. And
That's
yeah,
a good
yeah,
bet for a 16-year-old.
yeah, it's good. Well, I mean, I worked a lot, and so when I lost my net worth and I started working, I went from working 2 jobs to working 3 jobs, and everyone was like, "Oh wow, like you must be doing so well. Like that's so awesome." When in reality, I was just poor and broke, and I had no money, so I was working 3 jobs to get my net worth back.
Well, I guess we'll get our lovely editor Vinegar to cut out the part about that guy named Beep. That's where he said Mitch.
Son of a bitch, man.
No, you're good. He can just edit it out. Okay, and I think one last thing to really talk about ourselves when it comes to all this is how our trading strategies are different. I'm a big price action and scalping and scaling in and out guy. I do it for 0.5% all the way to I'm usually out by 22%, and I watch and cry as it goes to 400%. But not really. I'm a pretty emotionless trader, but Hugh, on the other hand, is completely different. And let him hear it, man.
Yeah, so if I'm not taking a position in most things unless I see an 80% risk to reward of at least making 100%. If I'm making 100% and I don't have an 80% chance of that 100%, then chances are I'm not taking a sizable position in it. I'm predominantly a swing trader. I take maybe 4 day trades a week to keep the lights on, but other than that, I'm holding. If I'm not making 100%, then and it doesn't have a catalyst, then chances are I'm not taking it.
Yeah, you really got to worry about keeping the lights on sometimes, huh? Yeah, all those damn monitors. Okay, well, man, before we get into the real meat and potatoes of this episode, would you fancy maybe going over our weeks a little bit? How was yours?
Yeah, this week wasn't great. I didn't hit my goal. I did 81 on the week. But predominantly, like I said, being a swing trader, not making my goal isn't end all be all because one single trading day can make my entire quarter. So even though I didn't hit my goal this week, I was about 40,000 short of my goal. That's
too.
okay with me. Yeah. So yeah, I mean, we felt the market. We talked about it. We felt the market slowing down about 2 weeks ago. And then when I went on vacation, I finally took a few days off because I was starting to feel burnout, and I accidentally took 10 times the size to take, and they dropped an offering 2 hours after I took that position, and I was on the beach, and I didn't even know that I had taken as big as a position as I did, and I came back to being down like.
Boy woke up to being sunburn red and portfolio red. Hot damn.
I was like, this has to be a mistake. This has to be a mistake. I saw an offering. I saw that I had taken 300,000 shares worth instead of 30,000.
What stock was that?
Oh my God, I gotta look. It was a mid cap. It wasn't a small cap. They were maybe Z. It wasn't ZFGN because they just had data, but it was a biotech, and I thought they were gonna run up to Catalyst or whatever. I was just taking a little something, a little something on the side, give me a little cash, and they dropped an offering.
If I put 300,000 instead of 30,000, mom would say you need a hell of a lot more buying power, crazy man.
Yeah, it sucked because I came back and I just wiped out a week and a half of gains in one single day trade.
We were talking about, Tuesday was pretty tough, for the market. It was actually my best day this week. Just, I think maybe some of the coronavirus plays popped. I never really have a certain thing. I actually looked for the year of the 43,000, or I think it's like 50,000 now, PL I've gained. The biggest one is $3,200, I think. Like,
whoa.
Mine are so spread out, dude.
Yeah.
And my losses are so small. I think there's only 1 page of losses and like 19 pages of dubs. So,
dude,
it's
awesome.
it's so different, We're just playing them every day. And the only ones that are really red are the ones I just give up on that I like hate. I'm like, this stock stinks.
Yeah, what's your worst? What's your just out of curiosity, what is your biggest like FU?
It's funny because so many people make so much fucking money on it, man. I've lost 33% of every dollar I've put into naked. And I've played naked like 4 times. Twice was after I said I'm never playing this shit anymore.
That is so funny. That is, yeah, we all have that. We all have that one.
It pisses me off because so many people are like, "Oh, naked, oh, love it." I'm like, all right.
Yeah, word.
Yeah, it's an absurd one. But hey, I think it's a good time to get into the big boy thing, man.
Yeah.
We want to hear about constellations. Like, what is it? Like, what comes from it? So tell us about constellations, man. That's the name of the episode. We want to hear all about it.
Yeah, I'll tell you as much as you want to hear about consolidation there, Dippity. Okay. So first, let's go over, because everyone uses Investopia. Everybody. I don't care. I've used Investopia before walking into any finance test. So according to Investopia.com, consolidation is the term for a stock or security that is neither continuing nor reversing a larger price trend. Consolidated stocks typically trade within limited price ranges and offer relatively few trading opportunities until another pattern emerges. Dude, that makes no sense to me. The only thing that I understood was they typically trade within a limited price range.
Yeah, it sounded like you were reading something. I was like, Hugh doesn't know what half these words mean.
Yeah, for anyone that doesn't know, I can't spell.
Smell.
That too. Yeah, I can't spell. My verbiage is terrible. My pronunciation is horrible. My punctuation's the worst, but that's all right. So when I look at that, the first thing I think about is they said that few trading opportunities emerge until a real pattern takes form, and I think that really that they're talking about large caps there. When large caps kind of trade in a sideways action for a while and they don't do much. But when I think about penny stocks and how consolidation applies to us, the first thing I can think about is news plays. I am usually looking for.
Well, hey, before all of that, I mean, I think it'd be good to explain in very simple terms what exactly the constipation is. Like, from my understanding, it's just where it just flat lines out after a lot of moves, correct?
Yeah, well, no. That is the commonly known thing. But if we take a stock that has fantastic COVID news, it blasts, 200% in a minute because of algos? I mean, people just slam that market buy.
Buy. Yeah.
Yeah, they're just slamming that. So I'm not chasing that. And when there's no support in sight, most people won't even touch that stock because it's up 200%. There's literally no support in sight. That's not the way to go, because often these often these stocks will create newer high of the days if it's that good of news. And you don't want to miss out on that because, there's already eyes on it, the volume's there, etc. So, like I said, consolidation. What you want to do is you want to let the chart come down, create new support. Usually I like to keep it within like a 5% range. I don't want it to be too jumpy on the chart. I want to keep within a 5% range. So, say going between $1.05 and $1. That's really where I want the range to be. And I want the technical,
so that 5% range is so if the stock went from 50 cents to $2, and you're saying it's now consolidating in this $1.05 range, which is your 5%. Just so we're keeping up.
Well, I wouldn't want it to go down that. I wouldn't want it to go from 50 cents to $2 back down to $1. If it touched $2, then I would like it to consolidate. Again, this is completely, this is if like they had just IPO'd and the news, like if we're talking about like a 180-day chart, there's probably some support somewhere around there. But say that there's not, I would like it to come down to around the 175 because I don't want it to lose complete momentum and go all the way back down to $1. So say that I would like it to keep between like the 170 to 175 range. That's where I would like it to consolidate, because what you want is the biggest thing is that you want to let the technicals catch up. Your moving averages, your VWAPs, EMAs, SMAs, you want all of that because that's how day traders trade. They trade.
Okay, I think a good way to kind of explain this to a wide variety of different levels of skilled traders is, I guess if I kind of ask some questions where I misunderstood. Okay, so Let's say this stock went from whatever it was, $1 to tapping $2, and then it dropped to 175. If it went from this dollar to $2, let's say at noon on Monday, when is this $1.75 or $1.80? This hypothetical price. When is it hitting that, and how long should it stay there?
Yeah, so realistically, I'm talking about not necessarily noon, but say that they
Okay.
had pre-market action and say they had pre-market news. So, say 8:30 news or, say
Okay.
9 a.m. news. It flies up to $2 within the first 2 minutes. Okay, I would like it to come back down, maybe trickle down to that 175 area, and then at open, we might see another surge of buying power at open. But then, ultimately, I usually however it opens. So if there's a huge volume or if there's a huge sell-off, it usually comes back. That's what I've noticed. So 9:30 to 10, you would like it to trade sideways between that range. That's really key. Is that you, like I said, you want to let the technicals catch up, the VWAPs and the SMAs, because that's how variety.
So let's say it goes from that 175 range, goes down to 160. What is your stop loss? What is your risk management for a play like this?
Yeah, if it was at 175 at open, and I mean, you got to see and this is where price action comes into play. If it's just like one huge, massive market sell and it touches 160, but then comes right back up, that's when you got to have the conviction of the trade, and that is when you need to be. You need to say to yourself, okay, that was one dickbag who market sold 200,000 shares of a low float and made it touch that 160. I mean, he just probably took out 20% of Robinhooders because they probably set a stop loss. It got hit, bids got filled, and now it's probably back to 165. And then through that first half an hour, you want it to come back into that range of that 175. And the most important thing is that it needs volume. If you're looking at the volume bars and the volume bars are really teetering off, and it went from like 3 times the relative volume to under relative volume, or it's at the average, that's when you need to
do you add more whenever it breaks out of consolidation?
Yeah. So the biggest thing is going to be when it breaks out of consolidation towards the new high of the day. I'll add when it breaks out of that range. So when it breaks, so say it's trading between the 170 to 175. When it breaks out of that 175 with good volume, that is when I'll add a.
What is your stop loss, or do you have one while it's in that 170 to 175?
Nope. It needs to, for me, the only way that I would have a stop loss is if volume completely dried up. I either go down 2 paths. If there's volume, I'll just keep adding. If volume's starting to die off, that's when you got to start taking some off. But if volume's there, volume predicts price action. So if volume is there, it's going to go up.
Gotcha. Okay. So usually with this consolidation, usually it goes up or down after it consolidates.
Yeah. So again, is that so we call that it's either going to cup and handle, or it's going to do, and I mentioned this in the one stream, it's going to do what's called a death line. So that death line is what we call the range, or the quote unquote new support. If the volume starts to die off, that becomes a death line. And ultimately, if volume dies off, you will see one huge red candle. And that's why we call it the death line, because it's like when it comes to the end of the cliff, it falls really hard. So kind of, if we have any technical traders, when you're looking at a wedge, this consolidation is creating a wedge. When that wedge gets really tight and it makes a move up or down, it's usually a good move up or a good move down. And if volume dies off and it gets to the end of the wedge, or it's really coiled, then we're going to see a big red candle down. And that's when everything.
Okay, so how about this? What if something pops and over the course of a week, let's say it pops from 75 cents to $2. And over the course of the next week or so, it is slowly dropping every day. Everyone's sad, pissed off on Twitter. Goes all the way down to $1.20. Then it's rotating in between $1.20 and $1.25 for 3 days. Is that a form of consolidation that you would buy, or that you would start watching in hopes of it going upward?
So me being a swing trader, it would need a catalyst for me to get into it. Like I know a lot of people like on catalyst buys, they like to buy an offering. I don't, because I need there to be two things. I need the chart to look good, which means that it either needs to be cupping and handling on a longer time frame, or it needs to be consolidating on a shorter time frame. So for instance, if there's an offering, I'm not automatically buying the offering unless it's way underpriced. Like KTOV in the 40s, I think it was at 44, and there was an offering for 40 cents, and it hit like 29 cents. I was buying the boat on that thing because it had
an offering. You knew the catalyst, and
I knew the catalyst.
You know, when an offering happens, it's, you know, even though it's a bad thing in the short term, it can be a pretty decent thing in the long term, as long as the name of the stock isn't tops.
Yeah, that is just, no one should be trading that. And then I think another huge thing with consolidation is that, because what a lot of people get caught doing is that, you know, a lot of people will listen to this stream, and Tuesday we'll have a pre-market runner that will, again, dip back down. It'll consolidate and start making a move back towards the new high of the day. The most important thing to understand is that when it's going for the new high of the day, say it hits a brick wall of resistance and bounces off hard. There's nothing wrong with that. Again, let it come back down. You do not want it to come back down all the way, but say it's in that 175 range, and say that brick wall is at 185, you would like it to consolidate around the 177 to 180 mark. Like right around there, that's real specific, but you don't want it to come all the way back down. But if it does, again, bounce off that support, and now you have your new heavy resistance. So then when it starts to trend back up towards that heavy resistance, if it breaks that heavy resistance, fantastic, add on that. But if it bounces off of that resistance again, that is a bearish signal, because now on the shorter time frame, you just create a double top, and on top of a double top that, you know, it's bounced off twice hard. And on the longer time frame, say like the 5-day, 5-minute, or whatever you want to say, now it's creating a downward trend, because you had your high of the day and now it's rejected that resistance twice. So that's when you need to take some off.
Hell yes. Do you have anything else on consolidation before we move on? Just anything that your big ass brain has to offer?
Yeah, the biggest thing is, if you guys don't know how to read volume and price action, you need to, because I don't even know. You just need to. There's no reasoning, except there's too many reasons at this point. Consolidation is a fantastic thing. After a big move after a big move up or down on the chart, I want to find consolidation. But that consolidation can quickly become, and I'm going to say this 1,000 times, the death line. And if you see the volume starting to become a downward trend, the volume bar is literally stair-stepping down, that is when you need to take some off, because volume can come out of nowhere. But if it's around 11 a.m., the volume's only going to get worse. So that is when you need to be able to read price action and volume. That's so key.
I think volume would be a great stock term of the week for next week that we could really explain, and some other things for how you can play volume, and not so much volume is how many share of stock have we trade, you know?
Yeah.
So with that, that sums up consolidation. Yay, Hugh, he did a fantastic job. And so next week we'll actually go back and review whatever stock consolidated so we can get a better chart view. Following that, let's get into some of our Q&A. We picked some out, 2 stock related, and then one little, little life fun one.
Oh my God, is that incredible, Bob? Dude, I love your trading skills. I was actually just wondering if there's anything that new traders can learn from an old school trader like you. Thanks, Bob.
Hey guys, this is Incredible Bob. I think for new traders, coming from an old trader like me, I think the key things to learn are 1 to 3 trading techniques. Master them. Realize you can't master them and keep doing it over and over and over again, and then realize after an enormous amount of time you still don't get it, and keep doing it until you actually can master it and be consistent. Then you can take the next step forward.
Wow, dude, thank you. That was a really good answer. Hey, man, I appreciate you stopping by. Okay, Hugh, we can continue now.
So the first one, what percentage of your portfolio is in longs versus swings versus day trades?
Okay, longs versus swings versus day trades. Okay, so I actually don't keep. I keep an IRA and a Roth IRA for my longs. So that's usually, and I can break this down. We can break this down in a different video. But my one IRA has Visa, Mastercard, Amazon, QQQ, and that's the entire portfolio. The other one has MYO, UAVS, OTLK, and it's starting to have. We're thinking about putting BMRA in there.
You do like
but
BMRI. If
BMRA is quickly
so
becoming a favorite.
after this, after I answer this, I think going over your favorite swing trades of the next coming month would be a fun one. But yeah, for me, all of them are swings with catalyst, and I day trade any of them that are moving up or down. So I'm 100% all that. I'm not longing anything just because I've watched The Big Short too many times, and I feel like the market's gonna crash. But with that, with the whole
Yeah.
swing thing, what are your favorite swings going into these next couple weeks?
Yeah, so I think number one is going to be BMRA is probably my number one because the chart is just too pretty. I'll run a series of scans on different Trend Spider is what I use right now. But I've also had oh, I'm going blank. I also use give me the scanner. Trade Ideas. So I use Trade Ideas and Trend Spider, and I'll do a series of chart scans, and BMRA is coming up across the board. If it breaks that 920, I mean, just on the chart alone, it's seen 12 to 14. Also, the other thing that we connected last week was that ENZ applied for the emergency authorization form, which if you guys don't know that's basically, that moves them up in the FDA line. Because of COVID, they moved to the very front of the line. So ENZ applied 1 week before BMRA. ENZ got the news on Wednesday. BMRA should be any day now. It's quickly become my favorite. It has a $7 million float. That's awesome. They have 2 different tests, COVID tests. They can scale up to 3.5 million tests per month of the one and 1 million tests of the other. They want to license out their technology so that we can scale it up in America. They're not just being capitalist douchebags. They want to teach other companies how to make this, but they're still going to make somewhat of a profit. I mean, I can just go on and on.
You
really
can
like
trust
BMRA.
his DD when he's get excited about all this FDA bullshit. So I mean, that's just him. We have different hobbies. I like to, play video games, watch TV. He likes to look at FDA and SEC filings. So
Yeah.
I think here's a good one is how do you find out which stock you want to do DD on and not just picking random stocks?
Yeah, so I feel like
Yeah.
we get this question a lot, Bob and I. So there is no one formula. Okay. We do want it to have 2 things because this is where, like I said, the only risk that I want to have in a stock is I want there to be the only risk that I possibly have is unforeseen risk, such as offerings, such as a delist notice, something like that is completely unforeseen. Like I can't do it. I don't know when an offering is coming.
Yeah, we know you don't know when an offering's coming.
Yeah, funny guy. So what really, it comes down to 2 things. It comes down to doing scans for charts. You have to get you literally just have to comb through 50 different charts, write down, and literally I have notepads all over my desk. My mom yells at me constantly because my room is a mess. I have literal stock shit everywhere. She comes in at night and she blows the gasket on me. But that's a story for a different night. But you need to create a list of 50 different stocks, and you need to go through their charts, or you need to go through their charts and write down maybe like 20. And then you just got to start poking around in the company, and if anything catches your eye, that's when you start to do DD on. I probably only choose one single stock out of probably 60. That's how tight the parameters become, because we only want really high percentage stocks, high percentage win rates. And then the other way is that you got to keep really detailed notes. So I'll tell you right now, I will be adding a fuck ton of acre in 2.5 weeks, because they'll be done their testing, or I mean their study, in 3 weeks. So I want to add a half a week before they're done, give them a week plus to put the data points together, so then they can release data. So I'll tell you right now, acre, I will be adding a lot in 2.5 weeks.
A lot of acre. Y'all heard that. Okay. Okay. So before we get into our final question and one little scenario, you mentioned earlier you missed your goal by 40,000. How do you set your goals? Are they percentage wise? Have they always been the same percent? Et cetera, et cetera.
No, they've never been the same percent. I mean, originally why I went to swing trading was because of college. It's like impossible to day trade while having
Without,
like 6,
I mean,
7
you
classes.
can't do it doing anything. I mean, like if I'm freaking out if I have to like do anything for 30 minutes. Like,
yeah, exactly. So my percentages are basically, I always set a reach goal and a like realistic one. So my reach is about it's about 8.5% of my portfolio.
So is 100,000 in there?
Or not my reach. It's over that, but yeah. So it's about so my realistic is about 8.5%, and my reach is about 13%. And that's because, again, being a swing trader, I mean, literally, you can make your quarter in one single day.
You're gonna be so damn rich.
So no, I honestly, I would do this job if I got a salary. I definitely wouldn't work this hard, but I would still love this job.
Yeah, no, this is quite a treat to be able to do for a living.
Yeah, I think everyone, honestly, and I'll say this till I die, anybody who doesn't do this job is a snoop. I don't see anything better in the world.
And we can't be offending anyone, because it's not like people that don't trade stocks are listening to this, except mom. Hi, Mom.
Yeah, and if you are, you're a schmook.
Well, she's saving the world from coronavirus. She's a pharmacist, so like, I mean, I mean, you can talk about, sleeping with my mom, but saying, her job choice, and my grandmother was also a pharmacist. I don't know, man. Maybe this. All right, guys. Well, it's been fun. No. Okay. All right. So, lastly, our final question, before we get into this little scenario, is, what are the dangers of going in raw, and why teenage pregnancy is becoming a nationwide problem? Do you have anything for that? I have a little.
Oh no, personally, I'm saving myself for the right Mrs. Hugh. So I wouldn't know anything about that.
I'm not
personally.
Saving myself for the Mrs. Dippity, but I am. I'm a free agent. I mean, that's not why I haven't gotten laid. I think there must be a few other reasons, but yeah. So I do have some statistics on teenage pregnancy, but it's good to know that Hugh isn't contributing to these statistics.
I'm also not a teenager.
You look like one. Okay, so nearly 200,000 babies were born to 15 to 19-year-olds in 2017, and that's a record low. And I think this is what is more surprising. I looked up some things on teenage pregnancies, but of course it auto-corrected to Teen Mom too, because I love that show. But I found some staggering numbers here that may be even worse than the teenage pregnancies numbers. Okay, so you ready for this, Hugh?
Yeah.
Okay,
Yeah,
so
hit me with it.
you may want to sit down for this, man. This is a lot to handle.
How'd you know I was
Oh,
standing
I'm
up?
standing up too. Have you ever watched any of my streams? I never
Oh,
sit
okay.
down. So, Teen
That's
Mom
true.
has 5 seasons. Teen Mom 2 has 9 seasons. Teen Mom 3 has 1 season. Teen Mom 2 is actually still airing, so I'm not sure why Teen Mom 3 is not airing, but Teen Mom 2 is on season 10. I didn't look into that too much. Teen Mom Young and Pregnant has 2 seasons. Teen Mom Young Moms Club has 1 season. Teen Mom UK has 7 seasons. Teen Mom, which I guess is like another UK version of Teen Mom, has 1 season. Teen Mom OG has 1 season. And a show called High School Moms even fucking exists. I thought that was kind of more impressive. There's at least like 700 episodes of this.
Being from Alabama, I thought that'd be like a pretty common
You're
thing,
confusing incest with teenage pregnancy, but I mean common misconception. So I think the way we can wrap this up is a little reading of the week. I got a DM last night, and I didn't fully. Well, I did. I couldn't really fathom this, but I actually asked him for a little more context today, but he didn't respond. So looks like we got what we got. So you ready? Hey,
Yeah.
man, I'm a 21-year-old college kid who started trading with my savings money over the last few months. I started my account with $17,000 and got it all the way to $35,000, and should have been higher if I wasn't greedy and held for too long. My account is now down to $11,000 after a rough few weeks.
Holy.
I was
Yeah, I'll
wondering
say.
if you had any advice for me to help get my account back in the right direction. This whole thing seemed so easy at first, and it took a turn fast, LOL. Thank you, and enjoy your weekend. So all I had for him is, well, you did really good at first, but it sounds like you have terrible risk management. How did you lose 70%? He responded, bad risk management and sold for losses because of getting nervous and being a beginner. Honestly, just need one solid day to get me back headed in the right direction. Just need some wisdom, and I've taken a liking to you and Atlas. You're a funny dude. I didn't have to include that last part, but I mean, why not,
Dude.
So he just needs one day in the right direction to get back on track. So, I mean, he doesn't need much.
Okay. What's his name? Can you tell me his first letter?
Well, it's actually the
letter?
same name as our producer. His name is Vincent.
Vincent, listen very carefully. You have the worst mindset I have. First off, if you guys ever think that we're going to sugarcoat anything, never. Vincent, you have the worst mindset in the world.
Jesus.
It's not one day, okay? Yeah, no. Because I was Vincent. A few years ago. You need to start tomorrow at ground zero. You need to say, okay, my account is 11,000. This is where I'm starting. This is where I'm starting. You need to put proper risk management, because honestly, nobody should blow their account up in that amount of time. Although I did blow mine up, it was death by 1,000 cuts. You need to do proper risk management, and you need to start
it from the
small.
bottom. Now we're 30% lower than where we started.
Literally, you need to say to yourself, okay, I'm going to throw $1,000 as my starter, and I'm not going to go up until I understand the pattern and I understand my strategy. Do not try and trade 1,000 different strategies. Choose one that you think you're most comfortable with and go in small and try the strategy. If that doesn't work, move on to the next one. But please have risk management and go in small. I can almost bet you that Vincent kept going larger and larger to make
Revenge
up for his
trading.
losses, and that is revenge. Exactly. I bet he started revenge trading, and that is how he really dug himself a hole. So Vincent, take this as a fresh start tomorrow. Start at the bottom, choose a strategy, and use beer money. Then when you can prove to yourself that you can trade correctly using a single strategy, that is when you start to scale up your money, because it
You
hurts a
got to
lot
think
more.
Hugh, because he's 21. Yeah, he's got all this blah blah blah. But most people never start investing. I think what is it, 20% of Americans invest. So I mean, you have so much time. Like I wouldn't rush it. Even
Yeah.
if you're like, I don't want to just trade with 1,000 so hard. Try 3,000. You have 11. Don't have some backup, because it sounds like whatever you're doing right now isn't working. Like you said, use one strategy. Don't try a bunch. I think that was my fault at the beginning, was trying a bunch. And instead of sticking with one, I decided to not, because I'm stubborn. And then I just decided to combine them all. And somehow that works. So.
And Vincent, the most important thing is that even though, you're going to be like, wow, like these guys are dicks. Yeah, kind of. But you're going to be okay. You just need to hone your strategy back in, choose one, go small, and then prove to yourself. That one thing is that you have is time. You have time on your side. I saw a statistic that 2 out of every 3 millennials, the oldest millennials, 36 right now. Okay, so you have time on your side. You're a Gen Z, but the generation before you, 2/3 of them spend more on coffee than they do investing in the stock market. Let that sink in. They spend more on coffee per year than they do in the stock market. So you're going to be okay, Vincent. You have time on your hands, and you're early.
That is such a heartwarming answer. I'm just sitting here almost in tears. All right. Well, I think that wraps up everything I had. Well, actually, I did have a little speed round, because people always like our speed rounds. And I think this will help people get to know you. And I think I can do this. I wrote this down like while we were recording. You ready? Favorite stock movie? Mine's The Big Short.
Margin Call.
Okay. Did you ever watch The Boiler Room this weekend? So good.
I did.
So
I
good.
watched it on Thursday. The hype by I hope Beach Trades hear this in Shark.
What?
The hype,
Dude, I thought Margin.
The ending.
Oh yeah, the ending is kind of like you wanted like an extra 20 minutes.
Yes, exactly.
Margin. I thought Margin Call was the most boring. It was like I don't know. Yeah, dude.
Really? It was the numbers. I like.
Yeah, there's that confusing. Maybe a price action guy, but like, come on, let's be real.
Yeah. Oh, you know what else I do like?
I haven't seen that.
With Gordon Gekko. Dude, that one's a good one. Because I always saw myself as what's
as Hugh Hefner.
Yeah. That's. Yeah.
Okay, well, mine's The Big Short. Okay, favorite stock book. Turtle Traders.
Yeah. No, definitely Turtle Traders. But I thought, I just started reading Rich Dad Poor Dad because everyone told me to read that. So I'm really liking that one, but I can't say it's my favorite yet. Check me back in like a week.
Stock documentary. I like the
stock
one
documentary.
There's ones on YouTube. It's like if you look up the Paul Tudor Jones or whatever.
Paul Tudor Jones is one of my favorite.
If you look up him, like one of the YouTube ones, will have like his story, and then in all the related ones by that same channel have all the other like really good OG traders. Okay.
Yeah.
Okay, so we just did favorite stock movie, favorite stock book, favorite stock documentary. How about favorite stock to trade?
Ooh, favorite stock to trade. Ooh, like over the course of
give me right now and forever.
I'll be honest. Right now, you know what? I kind of do options on the side. I just started posting a little bit about options, but Amazon options are kind of like my bread and butter.
I didn't know that.
I'm actually this week I said I'm going to start scaling up my Amazon options to like big money. But they're kind of my bread and butter. Secret, it just goes up. Watch it pull back 10% tomorrow.
Dude, my favorites, I think RTW and Mark, especially Mark back when it was like 30 to 40 cents every day. Whenever they tweet RTW, I always found that one easy. Right now, I think. Trib. Right now, my favorite, without a doubt, is I call it titties and pussy. It's TTNP, and I love trading. It goes from 29 to 30 and 30 to 33 a lot. So I really like it.
Right, I want to amend my answer.
Too late.
Overall, the last since I've been trading BIOC, that is by far my highest percent. I don't think, knock on wood, BIOC I've traded for the last 4 or 5 years with BSS, and it's been money like constantly. And then right now it's definitely Trib. Trib is one of my most winning stocks. BMRA definitely, and of course the baby.
I know
UABS.
you don't like this one, but damn it, I can't even think of its name. It starts with an I. It's like $1.20. Shit.
Oh, is that IPWR
No,
or something?
that sounds like iPower. No, this is some like medicine stock. I don't know, but I mentioned it to you, and you said I'm not touching it. Too many people are on it, but INPX.
Yeah,
I like it right now though. Okay, I think one more. It's not stock related, and then we can wrap it up. Sports teams. I'll go first. I love Auburn basketball, Auburn football, and the OKC Thunder.
Yeah, so Birds, baby. Huge Eagles fan. I always said that when I made $100 million, I'd buy like a.
Why don't you just save up like another
Huge.
$800 million and buy the team?
Yeah, that'd be cool.
Yeah, it is.
That's a lot of money. Yeah, so it's definitely Eagles, Sixers, Devils.
Sun Devils.
Huge Devils fan.
No, what do you? I don't know what the Devils like. What sport? I'm
Devils,
not a hockey guy.
Come on, dude. Big hockey guy. And let me say, I mean, football. The TCNJ Lions.
They're not doing too well.
Yeah,
I mean, like how are they performing?
Well, listen, we have some of my boys are on the team. They're gonna listen to this, but listen. History does not.
You never know what's going to happen, dude.
At
any given Sunday, any given Saturday, any given whatever day a D3 school plays on. Maybe like Wednesday, I guess.
Yeah. Yeah, I don't know. Monday night, Tuesday night, I don't know. Listen. They've won 6 games over the last 5 years. But
give it up for the fucking NW, whatever the fuck Lions.
Yeah, hey, TCNJ Roscoe Lions. All right, listen, I'll get you good ticket prices.
All right, hell yeah, man. Well, I think we did a good job. A little thanks in advance to Vinegar. Vinegar, if you want to say something for the people on your way out, like, hey, this is the guy's voice who edits everything.
Hey, what up, y'all?
Love you. Doesn't he sound like an editor? And not only is he an editor, but he's also in the fucking Navy. So don't fuck with him about being an artsy dude. So, hoorah. Thank you for tuning in to episode 1 of Pennies Going in Raw with Dan and Hugh, produced by Vinny. We love Atlas. We love the blazingchronicle.com for all our cannabis news. And yeah, that's that. And y'all enjoy your week. Hope it's green. Peace.
Later,
oh, yeah.